Shanghai, China has finished off the first half of the year with the economy strong and growing. What's now likely to be coming up for the second half? My colleague Timothy Pope spoke earlier with Dr. Ding Shuang, chief economist at Standard Chartered Bank.
Dr. Ding Shuang, welcome to the program.
My pleasure.
Now, we've had Chinese banks extending 1.84 trillion yuan in net new yuan loans in June. Now, that beat analysts' estimates. Now, do you think that trend's going to continue after the PBOC announced the fourth reserve requirement ratio cut for this year?
The loan data exceed expectation in June, but if we look at the total social financing, which I think is a more important indicator to look at, it disappoints. So the overall monetary and credit condition appears to be quite tight.
So do you think we will see, because of the M2 and the total social financing being less than expected, and perhaps even with the GDP coming in lower, do you think that we might see a shift towards a more pro-growth stance?
I would say there will be a shift to a more neutral position. In order to achieve a more neutral position, the PBOC may have to cut the reserve requirement ratio more. Our estimate suggests to keep the money and credit growth in line with nominal GDP, the central bank will have to cut cut the reserve requirement ratio by 2.5% in the next 1.5 years.
Now, do you see that there's inflationary pressure as expected to ease in the second half?
I think it depends on if we are talking about CPI or PPI. Those may diverge. The CPI inflation may trend up. The PPI inflation may trend down. CPI inflation will be affected by, in part, by the U.S. and China trade friction, with the cost of soybean import increasing. That would affect I think soybean-related product, but also some downstream product like pork. We expected the second half China's GDP growth would be significantly lower than the first half. So that would have some impact on imports, have some impact on the commodity price as well. So PPI inflation is likely to be lower than the first half.
And you spoke about soybeans and you spoke about trade and other commodities there. How do you see possible ongoing trade disputes affecting outbound shipping activities for China and the global economy as a whole?
Currently, I think the implemented measure is a 25% tariff on $34 billion US dollar of Chinese product. This first round of tariff, by our estimate, will have quite a limited impact on the bilateral trade. We think it would reduce China's export to the U.S. by about 5%.
And the exchange rate of the renminbi, everyone's been watching the currency lately. Against the dollar, it's hit its biggest monthly decline in June. Do you see further downsides for the currency in the second half? What's your forecast for the end of the year?
I think within a range, the central bank will reduce intervention. But when the central bank see the exchange rate start to overshoot, I think the central bank will intervene quite decisively. Currently, we forecast the end of year US dollar CNY at 6.58. The assumption is the US dollar is likely to weaken relative to euro and some other major G10 currencies. If the US dollar weaken, renminbi will appreciate slightly.
Dr. Ding Shuang, thank you so much for joining us.
You're welcome.
Loans and investments are also at the top of our other news headlines of the day. China's outbound foreign direct investment in North America was only $2 billion in the first half of 2018, the lowest half-year amount since 2009, according to a report by research provider Rhodium Group and law firm Baker McKinsey. Chinese FDI in Europe totaled $12 billion in the same period. The report says the companies believe that Chinese FDI in North America will continue to decline because the first half of the year saw the Trump administration continue to increase scrutiny of Chinese takeovers in the United States. Chinese conglomerate HNA Group has reshuffled its board and top leadership in response to the accidental death July 3rd of co-founder Wang Jian. According to Caixin, HNA issued several internal notices yesterday regarding the leadership changes. including the naming of Chen Feng, co-founder and co-chairman of the company, as sole chairman. The company has also reportedly expanded its 11-member board of directors to 12, adding Sun Mingyu, the chairman of the Hainan-registered Hainan Cihang Charity Foundation, and Bao Qifa, the former chairman of Hainan Airlines.